Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The rally, it is back on today. Apple hitting a new all-time high as well as mega cap earnings draw closer. We're trading the markets with the investment committee. And joining me for the hour today, Josh Brown, Joe Terranova, Jenny Harrington, and Amy Raskin. Let's go check the markets at 12 noon. In the East, it is green across the board. The NASDAQ is the big winner today. Of course, Apple is playing a big role in that. A new record high. It is nearing $4 trillion in market cap. Take a look at that. $11 to the upside, almost 5%. It needs to finish the day above 259.02 for a record closing high. I don't know if this has been a stealth move or whatever you want to call it, but this stock seems to be back as word is that the iPhone 17 is driving the strongest smartphone sales growth for Apple since the pandemic.
There are a lot of things that I just choose not to have an opinion on. This is technology, and I have to tell you, the thing that none of us are saying out loud, but is like buzzing like wildfire among Silicon Valley people, is that Apple has a secret project underway for employees only. It's their own in-house chatbot. Codename is Veritas. It is not available to consumers right now, but it is probably the early stages of what Apple's AI is actually going to be. Apple Intelligence was a bust. We all know that. It's not that it doesn't work. It's that it didn't drive people to say, I have to have the new iPhone. And the 17 is doing well, probably better than myself and most other people really had given them credit for. And I think that's why you're seeing the stock at a high. But what takes this higher? What justifies 30 times earnings, which is admittedly very high for a company with this level of growth? The only thing that could do that is a chat GPT that Apple develops and releases in its app store as its own in-house AI available to consumers. And the buzz right now is that that's a thing that's going to happen. That's not in anyone's numbers. So right now, OpenAI's app, ChatGPT, is the best app for AI in the App Store. And then we also know Apple's heavily reliant on Gemini. But the thing is, Apple employees are now using Veritas, and they are getting contextual answers based on their own personal life, their own personal history in using that. Well, and if and when Apple decides that they want to roll this thing out, that's a whole different story for the stock. And that's the thing that I think nobody has in their numbers or their expectations, and that is the most important thing that could happen.
If we move the ball from here a little bit forward and think about Apple in the context of the mega caps, it certainly is one reason why Goldman's Tony Pasquarello remains more bullish than not on these markets. He says in a note, quote, "If you want to be a serious bear right now, I suspect your timing needs to be impeccable, or the fundamental setup needs to change. Otherwise, you're fighting the Fed and fiscal stimulus and U.S. mega cap tech." We know that Apple reports in 10 days. We'll show you the wall to give you an idea. And just to refresh your memories on when the other companies do, as JP Morgan today says that the earnings expectations, well, they're projected Mag 7 to grow earnings by 15% in Q3, the remaining 493 at 4%. 15% versus 4%. That's why there remains all this optimism. Is it euphoria around it? Is the bar high? Is it too high? Canaccord asks that question today. Joe?
No, I don't think the bar is too high. And I do think it is all about earnings. You're looking at the S&P 500, which is on track right now to deliver high single-digit earnings growth in this quarter. That'll be, I think, 9 consecutive quarters that we've had positive earnings growth. And guess what? You have the Russell 2000, which I get is a highly indebted, and now the composition of it is more junk than anything else. But the Russell 2000 is finally going to join the NASDAQ and S&P earnings party. That's going to be up year on year, somewhere around 35%. So this chase for performance that we've been speaking about, it's real. It's a phenomenon that happens in years like this where markets are higher. And as you push towards the end of the year, portfolio managers who are behind are going to chase. It makes bears look foolish. If you are bearish and you look into 2026, you're probably going to get an opportunity at some point that you are correct, that there will be that 5% correction and volatility is going to spike. But now before the end of the year, we just kind of resiliently overcame some headlines surrounding the president in China, the regional bank questions that we've had, and you had the VIX spike to 30. Where is the VIX now? If you could show a chart of the VIX, I think it's back down to 18 as we're speaking. So that's resiliency.
I really like the way Tony says you'd have to have perfect timing to be bearish, and I think that's absolutely right. But I don't think this is binary. You don't need to be bullish and you don't need to be bearish. It's okay right now to be cautious, and I think it's okay to be apprehensive. And what you can do, if you're a little cautious or a little apprehensive, you don't need to have perfect timing. You can incrementally de-risk. And so I really, you guys know I'll get like really fired up when it's April of 2025 and we're all talking about like, oh, should we be adding bonds to your portfolio? Should we take, should we reallocate now? No, now is when you start to think about reallocating, and you don't need to be bearish to do that. You can just say, hey, we've had a huge run. We're up 15% this year. We're up 20+% last year, the year before that. So you don't have to be one or the other, but you could take off 5%, 10% of the things that have really, really worked. Stick it in something that diversifies, bonds, cash, other stocks.
Don't you think, though, that constantly citing the fact, well, we're only up this year to date, or it's skewed by the events post-Liberation Day, where it destroyed the market, and then that skewed performance of everything. Obviously, things had to fight back from what was not known in the moment, but an artificial bottom. It was an unforced error that, so to speak, that took stocks down. So now, if you look at
that's my point. Like, why would you change your allocation? Why would you de-risk in April? That's what I'm saying. De-risk now. It was an artificial bottom. And I had clients, literally I had clients who were calling me saying their other advisors were saying, oh, you have too many stocks. You should be buying bonds right now.
There are a lot of people who don't agree with you in the fact that they should be de-risking at all.
Okay,
right
fair
now.
enough. All I'm saying is for those of you who are not full-on bullish, those of you who are a little apprehensive, do it now before it's down 10%.
I understand,
do it at the
but
top.
you've been apprehensive since the beginning of the year.
Oh, I've been apprehensive since the beginning of my career. I'm always going to be. And so that's why I think when you have market peaks, like that's when you de-risk a little. You do not de-risk at the bottom. This is a peak. Like this is a peak, however.
Well, we don't know it's a peak yet.
No. At this moment in time, it's a peak. We're going to have another peak. But if you're sitting home and you're uncomfortable, and everyone I'm talking to is uncomfortable, do a little bit incrementally now. All I'm saying is you don't have to be bullish. You don't have to be bearish.
All right. Well,
right?
how
You
about
can just be somewhere a little in the middle.
How about this? If you take a look inside the market and you try and decide, am I on Jenny's team? Am I on the bullish team? The Wall Street Journal had an interesting look today about what's happening under the surface in the market. Josh, I'll come to you. And whether it's a warning sign for stocks overall, utilities, healthcare, and staples are the sectors that are leading this month. That's not exactly the most bullish of signs you'll ever see, is it?
I'm so glad you brought this up. This is the ultimate example of cherry picking starting points and acting as though the world just began in January of this year and nothing prior had ever taken place. There are specific reasons why those are amongst the leadership groups in the market, but A, they're not the only leaders, and B, if we don't understand the context behind the leadership coming from those spaces, then it would be really easy to assume, oh, they're buying utilities, therefore everyone's bearish. Wrong. Utilities are going through a once in 100 years re-rating because it turns out when you spend $1 trillion in CapEx on AI, you're going to need a lot more electricity than what the estimates would have suggested as recently as a year or 18 months ago. This utility rally kicked off last March. It's now been in force for 18 months, and everyone understands the utility stock rally has absolutely nothing to do with people becoming risk off. It's the opposite. This is the bull market in electricity. It has nothing to do with.
I think people understand that. People understand that. What about staples and healthcare? What would your retort to that be?
Okay, we thought Donald Trump and RFK were going to be the four horses of the apocalypse for healthcare. It turns out nothing could be further from that. We get announcements about 100% tariffs. And then the next day, Pfizer says, well, we'll break ground on a new manufacturing facility in the U.S. And the White House says, all right, cool, we're good. That doom and gloom that had been hanging over the healthcare sector is starting to clear, and it turns out there are a lot of secular growth stories in the healthcare space that aren't necessarily big pharma, and those stocks look pretty good. Not great, pretty good, but they're building off a very low base. They've done nothing for 10 years in many cases. This biotech rally, biotech has just had a lost decade. I don't even think people understand that. So that's its own story. What's up? So then you put that alongside this Mag 7 thing. Please understand, last quarter, analysts were looking for 13.9% earnings growth, and the actual Mag 7 earnings were plus 26.6. They did double the growth rate. So when you have a market where you have industrials, utilities, you have now a healthcare rally, you have international stocks, every country making record highs, and then you combine that with this Mag 7, it is a much bigger story than just, people are buying the defensives. A, they're not all defensive stocks in that sector, in those sectors, and B, try and spend like 10 minutes thinking about why those stocks are going up, and if you find out it's because of unexpected earnings growth, okay, it's not quite a risk-off move that portfolio managers are pursuing.
Amy?
I agree. Broadening the market out is a good sign, not a bad sign. But I also do agree that there have been some signs of froth, and there have been some stocks that have just gone asymmetrically higher, and taking profits in those names, which I talked about a few of those a couple weeks ago, I don't think is a bad idea either. So I think you can do both.
There are times where the JOTI ETF is going to be more quality, and there are times it's going to be more momentum. In the month of October, the JOTI ETF is down because it is more momentum. And what has happened so far this month is the market is favoring quality. Quality's up 1%, momentum's down 1%. But I'm going to make the argument that's actually healthy. That's exactly what you want to see for a resilient marketplace. That's indicative of saying, okay, we're going to work off some overbought conditions. We're going to reallocate, rotate internally within the market, and then we're going to go from there.
We're also following the credit-related stocks today. I want to get to those before we finish our A block today, because the PE and the alts managers, that's really how we've been looking at these, have not traded well over the last month, as you know. The Carlyle CEO, Harvey Schwartz, made some comments today on credit and a quote-unquote worry list. Quote, data suggests that companies are growing, employment's steady, inflation's a little sticky, but there's nothing in the immediate horizon that suggests that things are crumbling. Having said that, late cycle, it should be on a worry list. Some of what's been happening in credit. The note of the day, arguably, today comes by way of Citi, which talks about those BDCs, the business development companies. Quote, a credit downturn is brewing in the leveraged loan market, and public-facing BDCs are positioned to feel that pain. The relentless search for yield has allowed a massive volume of questionable loans with questionable covenants to be originated and sold, creating a systemic vulnerability. BDCs are directly exposed as these very leveraged loans are their core assets. The first cracks in this structure are beginning to show. Obviously, the BDC side of the story tells its own story. Those stocks have not traded well at all. You own 6th Street.
Right.
Specialty Lending.
Yep.
It is a BDC.
Yep. And I also own Hercules Technology, HTGC.
Okay. So how are you thinking about this today?
Yeah. So we bought 6th Street in January, and that research process was super, super intense, understanding the whole space, what kinds of loans each of the BDCs made, how many they had, and like what their credit structure and credit requirements were. We came away saying 6th Street is different than the rest. They're the best management team. They have the most thorough lending standards. They have fewer loans. They have 95% first lien investments, which is higher than any of their peers. They have an ROE of 16.8%. That's almost 6% higher than any of their peers. And this all goes to like kind of the quality of the management and the rigor and structure of the lending standards. So you really can't buy these companies just, oh, I like 10% yields, let's buy them. You really need to understand what's under the surface, and it is hard to do and it's hard to understand. So there's a few out there that are great. There's a lot out there where all of the commentary before is going to be perfectly true. One thing that I think is confounding is that the private equity stocks haven't traded as as poorly as the private credit stocks, where in the capital structure, if there are problems, the equity holders are going to have more pain and have more risk than the credit holders. So I actually think the credit BDCs shouldn't be down, or should be down less than the private equity ones. So maybe that means the private equity ones should be down more than where they are now. But Sixth Street and Hercules, like, they're pretty unique in that space, so I feel really comfortable with them. But it's dicey. It's legit.
Yeah, you get a nice spike in Sixth Street Specialty as we talk about it. We'll come back to this in a minute. I do have some breaking news out of the White House. Eamon Javers has the news for us. What did we learn, Eamon?
Scott, President Trump was meeting with the Australian Prime Minister Anthony Albanese here at the White House just moments ago, making some positive comments about trade and relations with China. Very encouraged ahead of his meeting with Xi Jinping that's on the schedule for next week in South Korea. Now, the president also, though, although he was saying that he expects to have a good meeting, he does have a good relationship with Xi Jinping, also making a specific threat in response to the Chinese restricting access to rare earth minerals. President Trump saying one thing the United States could do is restrict exports of airplane parts to China, specifically mentioning that the Chinese buy a lot of Boeing aircraft, and if he wanted to, he could restrict their supply of repair parts for those aircraft, which obviously would have an impact on the Chinese economy, would have an impact in China. The president said he doesn't want to do that, but that's one thing he could do in retaliation. So some optimistic comments here, Scott, I would say, about his relationship with Xi Jinping and the prospects for a trade deal next week, but also threatening to raise tariffs to 157% on November 1st with China if they don't get a deal next week, and threatening this airplane part retaliation as well, which again, he said he doesn't want to do, but just sort of rattling the saber there a little bit on trade. Scott.
Yeah, not impacting the market. Certainly maybe the market just is convinced the worst of whatever is threatened would not be in finality, and that's why you have what you do. Eamon, thanks. I appreciate that. North Lawn of the White House, Eamon Javers for us. All right. The credit issues have certainly spilled over to the regional banks. We have to get to that, and we will after this break, because there is one that is reporting today, and it was right in the eye of the storm last week. We'll tell you about that. It plays right into, in some respects, Josh Brown's best stocks in the market, which he has as well. His favorite chart in one specific group, and it's not a stock he owns, which is even more interesting. We'll tell you about it next. All right, welcome back. Dow's good for 400, as you just saw. The market liked those headlines that Eamon Javers brought us regarding the China trade war from the White House. So we are highs of the day. There's Zion's. We show it to you up near 3% because it does report after the bell today. Remember last week? The stock lost $1 billion in market cap on Thursday alone. That's after they disclosed $60 million in loans that they said were unlikely to be repaid, as regional banks find themselves, as I said before, in the eye of this storm around credit. Wells Fargo says it's a buying opportunity for this group. Joe has at least a dozen of these names, I feel like, in front of me. I'm not going to read them all off. I usually do, but I'll save time and I won't. But what do you think here?
We have 7 mid-cap regionals and we have 2 super regionals. I don't know if I would buy them here. I think I would pause, just hear what you're going to hear from Zions, hear what you're going to hear. I believe it's tomorrow or Wednesday on Western Alliance. I apologize for not knowing, but I know it is this week. Understand these are small cap regional banks. What I have ownership of are more mid-cap regional banks, and a lot of those banks have already reported, and they've already confirmed and given you the confidence that they do not have the challenges ahead of them. So I don't think this is a story that's going away. I think we carry with us into 2026. I think, yes, in fact, there are some bad loans out there. We're going to hear more details about that in the coming months, but I don't think you could universally assign that the regional banks themselves or a sale or the regional banks themselves are going to deteriorate to the regard that we believed last week.
Well, let's see what Zion's delivers and then what they say. It's just a good time to hear from the company, which we will, as I said, coming up. There's a stock up near 3%. I mentioned Josh Brown's best stocks in the market. It plays into this because it is the financials as a group. Now, I teased the fact that the stock he likes the best, the favorite chart of the bunch, as he eloquently put it to our producers earlier today, is Amex, which you don't own, which did get its target raised today, which is coming off pretty good earnings of last week. Tell us more. Why did it land? Why did it land on your list?
You don't have to know anything about. You don't have to know anything about technical analysis at all to understand what's taking place here. But if you're interested in the specifics, this is a name that has obeyed its 50-day in the recent uptrend, but in the long-term uptrend, it's obeyed its 200. Even at the worst moment this April, this stock was not down for long. You've got to look at this. You've got a golden cross here over the summer, 50-day crossing over the 200. Jenny, cover your ears. I know you hate this stuff. But what that means is that the buyers have taken control of the stock, and they are coming in faster and faster on the dips. So it's not voodoo. It's human behavior. And why are they doing that? American Express is, in addition to being the primary financial to capitalize on the fact that 50% of the spending in this economy in the United States is coming from the top 10% of households. Every one of them has an Amex Platinum card in their wallet. It's also a bigger story about capital return. And I'm going to get to that in 1 second. I would just point out it's tough to buy stocks at all-time highs. Nobody wants to do that, and I don't aim to do that specifically. But this is a fresh breakout to new highs. There are now no natural sellers left here. I think it can march up to 400 over time. And the reason I don't personally own it is because I'm already very exposed. American Express is the second largest holding at Berkshire Hathaway. It makes up 16% of Berkshire's portfolio. They have 152 million shares. So they have 50 billion worth of Amex on their books. And I am a long-term Berkshire Hathaway shareholder, so I don't need to double own Amex. That's why I'm not personally in this. How did Berkshire Hathaway end up owning 22% of American Express? They didn't buy it. American Express has one of the most aggressive long-term share buyback plans of any company in the S&P 500. From 2005 to 2025, they have basically cut the float in half, from 1.2 billion shares to under 700 million shares. So for me, this is a really great setup for a trade. I'm along for the ride via Berkshire, but this is the best chart in all of the financial services stocks on my best stocks in the market list right now.
Joe likes to buy stocks at highs.
I do.
If you would have read your Long Island homies book, buy stocks or buy high and sell higher. You know that.
I have the first copy printed.
Of course you do. You know what's interesting?
You got to look after your guy from the 516.
You know what's interesting about Amex is in July of 23, we began to build positions in a lot of the regional banks that you talked about, and we also built positions in financials. Very quickly moved to an overweight in the financial sector. With Amex, the reason that we bought it was the balance sheet. We didn't buy it based on momentum. We bought it at 168. It's 348 now. Yeah, momentum is present now, but we bought it because of the return on equity, the debt to equity, and the way in the environment of 2023, they were managing the business relative to the rest of the financial sector, which if you remember back at that time, really no one wanted to own financials, certainly not regional banks.
Jenny owns Amex, right?
Yeah,
Quick.
and this is when I really like things, when actually the fundamental picture matches up with the technical picture. And what you have with Amex is you've got a 20 times multiple, which isn't that cheap, but it's cheaper than the market, and you've got 13% earnings growth ahead, and you have a great story, and you have the high-end consumer. So in this one, I'm all for it, but I'd rather own something at 20 times with 13% earnings growth than 30 times with 9%.
All right, welcome back. We're going to start with Josh Brown's so-called low-altitude economy because Archer Aviation, stock he owns, strikes a major deal today with Korean Air. Korean Air plans to purchase up to 100 Archer Midnight aircraft. They announced in a release today. Josh, tell us more.
Yeah, so I've explained this as I own this and Joby. I look at Joby as the Uber of the sky, and I look at Archer as the Boeing. Archer wants to sell the Midnight aircraft. Neither of these companies has any meaningful revenue or earnings or anything like that. So what they trade on is announcements and partnerships and deals. That's what moves these stocks. So the big one, though, and this is a great announcement, obviously, but the big one and the reason to own them now, the Dubai Air Show is going to be the biggest event of the year for the eVTOL space. And again, these are the two biggest companies in that space. I think there are some big announcements being held for that. And if you think that that's what these will trade on, new deals, new partnerships, then you obviously want to own these stocks in advance. I would just caution people, there are no fundamentals. So we're 2 years away from commercialization. This may not be for everyone.
All right, it's up near 6% is Archer. Starboard is apparently going to detail the need for change at TripAdvisor. That is going to come tomorrow at the Active Passive Conference. Ken Squire runs that. Starboard reportedly took a 9% stake over the summer. They have not discussed it publicly. I think Faber has Jeff Smith on tomorrow, too, from that event. So you want to catch that. Jenny, I'm sure you'll be watching that because you want to hear about this. You own the stock.
Yeah, and even without that, it's great that it highlights it, but even without it, it's compelling. When we bought it, it was trading at 8 times earnings. Sorry, this is what it is today. We bought it in December of last year at $13. Now it has 8 times earnings, 12% free cash flow yield. Back then, it had this like overhang of Liberty owning stock. That's all gone. It's just a huge free cash flow business, and it's underappreciated, underrecognized. So I'm delighted that Jeff Smith's bringing some attention to the story.
All right, well, we'll find out more tomorrow. To be continued. Coming up, final trades. Josh Brown, you're up first.
Still my favorite financial as a long-term investor, JP Morgan. Stock looks great.
Thank you very much. Amy Raskin.
Illumina, the competitive machine from Roche, is finally out. I think that was an overhang for the stock, so I think it can move up from here.
All right, thank you. Jenny Harrington.
All right, Columbia Banking. It was unjustly caught up in last week's regional bank panic attack, 5.7% yield, 10 times earnings.
Joseph.
If I could give two, it would be XBI and BABA, but we're only showing one. BABA.
Well, you just gave two.
I did. I stuck that in.
Broke the rules, nonetheless. All right, so the market looks right around the highs of the day. Of course, that's one of the stories. The other is Apple hitting a new all-time record high. We'll discuss in a couple hours.
Hello, everybody. Hope you all had a good weekend. It's Monday, October 20th. It's currently 6:20 p.m. Just saw an episode of Halftime Report, some clips from the show. Josh Brown and a few other guests sharing their stock picks. And in this video, in this segment of the video, what we're going to do is cover a lot of the stocks they talked about. So let's take a look real quick, and then I'll get into the indices in a few moments as well. But there's about 18, not all of the stocks will be covered, or ETFs, but about 18 of them that you can see here on the left-hand side that I will be covering. And we will also take a look at the S&P 500, the NASDAQ, the Russell 2000 ETF, the Euro Stocks ETF, the Dow Jones. We'll also take a look at Tesla, Apple, Meta. Today was a really bullish day. The sectors, which ones are looking strongest right now? And then, of course, we also have a few requests from our members. By the way, if you're a member and I missed any of your requests, please, just let me know in the comments section if there's a specific stock. If you're a member that I missed, doing a review of it, please just go ahead and repost it. Sometimes I forget to jot down specific ticker symbols. All right, let's get into this now. So, guys, here we are. Look at this. The Dow Jones up 1.12%. Gaps up in the morning. Okay. Breaks through that little consolidation area. Breaks above that little trend line. Continues up. And then just kind of moves sideways. But it was up 1.12%. NASDAQ also. Big gap up here. Moved up. And then it's just kind of stayed steady throughout the rest of the day. From 12 p.m. to 4 p.m. It just didn't really move much. Most of the move happened in the morning. Up 1.37%. The S&P 500 also gapped up in the morning and did the same thing, up 1.07%. Russell 2000 was up the most. So big gap up here. Actually, you can see what kind of built right there was almost like almost like an ascending triangle type pattern, and up 1.95%. If we take a look at the heat map, that's going to give us some more insights on the individual stocks within the S&P 500. You see Apple was up 3.94%. Amazon was up. Tesla, Google, Meta, all the big names. Financials did really well today. Healthcare stocks did really well. Energy stocks did well. Basic materials. What didn't do so well? Orco was down 4.85. Consumer defensive stocks were down. Nvidia was down. Interesting, right? Down 0.32%. And Broadcom was down just 0.03. So it wasn't a big drop or anything like that, but it's significant to keep an eye on. It's a significant stock, so we should keep an eye on that. How about the groups? Let's zoom in. Let's zoom in on these babies. We got basic materials up 1.72%. So gold recovered. A lot of the metals recovered. Industrials was up 1.29%. Communication services up 1.24%. You can see all the percentages right there. The only one that was down today was consumer defensives, down 0.15%, and utilities was up just 0.04%. So, and here's the 1 week performance. Real estate at the top for the week, energy at the bottom. And for the 1 month so far, utilities is at the top, up 8.33%. Consumer cyclical financials and communication services are down the most. All right, let's get into the stocks now. We're going to look at the technicals. That's how we assess the strength, right, of whatever it is, whether it's an ETF or a stock. We're going to quickly assess the situation, and I'm going to look at both when it comes to the indices here, the weekly charts, all right, which are still in a very strong uptrend, as you can see here. I am utilizing something called the Ichimoku indicator. Let me get rid of this line here. It's what you see here. It's plotted on the chart. There are the candlesticks. These represents weeks right now. So there's the weekly charts. Price is above the Tenkan-sen. It's above the Kijun-sen. What are those? This is the 9 period, the midpoint of the last 9 periods. This is the midpoint of the last 26 periods plotted there. So it's a little slower. We want that green line to be above the red line, which it is. All right. You can see the crossover that took place right there. We also want price to be above the Ichimoku cloud. That's the name of this indicator, Japanese indicator that's been around for decades and used a lot by financial institutions to help them quickly assess the strength of a trend, because Ichimoku stands for at a glance. You don't really need to spend too much time on any chart with this indicator. This is really the only thing you really need, honestly, because it is comprised of 5 moving averages. That 9 period, the 26 period, then you've got yourself the Senku span A, that light colored blue line, which actually projects into the future. It takes the midpoint of these 2 moving averages, right? So if you go right in the center there, and you go 26 periods into the future, that's where you will always find it. Very unique. And then what about the Senku span B, the purple line? That's comprised by taking the midpoint of the last 52 periods, but instead of projecting it under like we did here with these moving averages, it projects it 26 periods into the future. Interesting. And so it's supposed to give us some insights about the strength of the trend, where it looks like it's heading. And then you've got one final indicator here is the Chiku span, or lagging line as they call it. And basically what that is essentially is the closing price, but it's in a line form. And instead of it, being projected right there on top of the candle, it's actually projected 26 periods into the past. All right, so in this case, 26 weeks into the past. And what we want to do is look to see where that white line is, all right, in relation to the candle 26 periods ago, which is that candle right there. If the white line happens to be above, like it is here, that's very bullish. If it's underneath, it's bearish. Like over here, you can see it dropped underneath. And if we were to project 26 periods into the future, you can see how we had a little drop there. So it does give us some insights on the strength of the trend. So when you have all of those things cooperating, all those indicators giving us the same story, which is price being above the moving averages, like I just mentioned, then you've got a super strong trend. And the second things start to fall apart, like they do, like it did right here. You can see that sometimes it can last for a short period of time, or sometimes it can be short-lived. Okay, when it drops under a moving average, and sometimes it can be more extended. Right, so like in 2008, I'm sure you guys remember 2008. Anyway, so now that you guys know the rules here, let's get into this. So the S&P 500 on the weekly chart, very strong trend. I like what I'm seeing here, up 1.04% today. Here's the daily chart. Okay, above the moving averages. Last week on Friday, it got back above, and then it just gapped up, like I said, and continued to move up. So it looks really good. The QQQ ETF, this is the this one also, by the way, check this out. I did make a little triangle there. Last week I was talking about how we were basically getting embedded in this little symmetrical triangle, right? We were getting stuck in there. And I said, well, we have to wait for a breakout. It's either going to happen to the downside or to the upside. Well, the good news is the news helped to push price above the triangle. there's now a higher expectation, a higher probability that price will continue to move up. Okay? So that's all that's telling us really. And you can see here that the positive DI is also crossing now with the directional movement index. It's crossing the red line, the negative DI 9. Okay? So that's also positive. So it looks like we're back in business again. All right? Just when you thought things might potentially fall apart, because we did have this big red day, right? This happened on Friday, on October 10th, 10 days ago. And now all of a sudden, things are starting to look a little brighter. Now, here's one concern that I still have to some extent, and that's the fact that, look, if you look to see the high of that candle, of the red candle there, which is 613.18, we didn't get above that yet. All right, so we have not taken out that high. That's still important. And the same thing I think applies here yet with the S&P 500. All right, you can see that we haven't taken out the 673.95. So we're still under that. That's a level of resistance that you have to pay attention to. Here's the Russell 2000. All right, this one too, up 1.95%. This as well needs to get above the high of that candle, that high of 252.77. But look, the bottom line is everything looks good in the daily and weekly chart. What about Euro stocks, FEZ? That one looks really good too. Okay, this one, unlike the SPY, the Q, and the Russell, actually maintained for the most part a nice uptrend. See, if we go back to the SPY, it was kind of like getting stuck in there. The FEZ has been looking pretty strong. I like this one. And this too also has to break above the high there of that candle, which is 63.60. All right, what about the Dow Jones? Same situation. The only difference here is again, it is a smaller group of stocks that are in the Dow, right? There's only about 30 stocks there. So it's not like it's not going to give you a really good representation of the stock market, but some of the biggest stocks are in there. And if you look at the prior high of 470.38, that needs to be, it's going to find resistance there. That's about 0.68% away from where we currently are. Now, what led this rally also is, of course, positive news. And when we have positive news, the VIX and volatility and fear comes out of the market. So it dropped 12.27%. So last week on Friday, October 17th, we had that, initially the volatility spiked and then it just continued to drop throughout the day. And now we're seeing a continuation, but we did stop right at the cloud. So let's hope it doesn't bounce here. If there's some negative news that come out, that's what will happen. The volatility will spike once again. All right, let's keep going. It's almost like a day-by-day basis, really. We never really know what's going to happen. American Express, they talked about that quite a bit today. Interestingly enough, it did close above the high of that candle, but just slightly. You can see 349.48. I don't like this breakout candle. It's a it's a reversal candle, okay? And if you have low volume on a breakout, see how the volume here down below is lower than the prior days on Friday. So Monday's volume is about half the amount of trading. So it stalled. It stalled right there. So I would not be jumping into this quite yet. I'd want to get a little more confirmation. The ADX, which represents the momentum, that white line that you see there, if that's dropping, it's not telling us that this thing is, the momentum is building up here yet. Over here where it started to go up, where the momentum started to increase, see that white line right there? When the green line is above the red line and the white line starts to move up, you can see how it will lead to, it could be a short move up or longer. And once the momentum starts to drop, so does price, basically, right? It stalled here and then dropped. Okay, let's keep going. So that's the American Express on the daily. Here's the weekly chart for you. See, it's like stalling at that level. All right, Joby Aviation. And by the way, I've reviewed all of these stocks already, the 18 ETFs, 18 of them. I'm not joking, just 3 of them passed the Ichimoku test. And the test to get that blue little flag that you see there is that they need to pass on both the weekly and daily time frame. So Joby over here, as you can see, price is above the Tenkan-sen, the Kijun-sen, the Cloud. All right, Chico span is above price on the weekly chart, so passes the test there. On the daily chart, it does as well. The cloud is bullish. Single span A is above single span B. Price today broke back above the Tenkan-sen after, Friday it found a reversal point right there at the cloud and popped. It's up 11.3%. Be careful with this stock. It is, it's got a high beta, which means that it moves quite a bit. And so anything that moves up 11.3% in one day can also drop that much very quickly. And it's still not a profitable company. As you can see here, it's got a negative 813,505.12% profit margin. But it is a $12.4 billion capitalization. It's got a $12.4 billion capitalization. So that's kind of interesting. MTUM, iShares, MSCI, Momentum Factor ETF. This one here on the daily chart, yes, it gets the blue flag. Why? Because price is above the Tenkan-sen and the Kijun-sen and the cloud. On the daily price, the Chico span is also above the closing price right there. I don't know if you can see that. See how the white line's above the closing price. And then on the weekly chart, it's still the same thing. The only thing with this particular ETF is, it's been moving sideways here. It did pop a little bit, and now it's still moving sideways. So it's not moving in a nice, easy 45-degree angle. It seems to take little breaks in between, assessing the situation, cautiously and carefully moving step by step higher. Okay, and right now we are consolidating. We're under this, inside this box, and until we break through, I would probably hold off on taking any new positions here on this one. I'd want to wait for confirmation. I'm more of a breakout trader, though. Everyone's got different strategies. Personally, I would wait for a breakout. Okay, ACHR. Now, this is where the stocks start to fall apart. And although they do have high percentage profits today, as you can see here, ACHR was up 6.58%. It moved up. It's still under the 9 period on the daily. And if we look at the weekly chart here, it does look pretty good in the weekly. It's finding some support on that little weekly point right there. Remember, though, with the weekly charts, folks, this candle is still forming. We won't know what it actually looks like until Friday around 4 p.m. So right before the closing price on Friday, 4 p.m., that's when we'll have a better assessment, because this could certainly tomorrow drop and then close under the Tenkan-sen Kijun-sen. It's a dynamic candle that's constantly moving day by day, and then once we have that closing price, that will happen right there, like it did on Friday. We'll know exactly where it's heading. So let's focus mostly on the daily charts here. I've already assessed all these, and like I said, there's something off about the technicals for all of these stocks. So here's ACHR. Look at Aries Management. It's in an embedded, decline. All right, we're in a downward channel. And if you can pick bottoms, that's fantastic. I don't know how you can predict it. If you can, please give me your insights on how you can do that. I personally can't. I can't figure out exactly where price is going to turn around. I look to see what the cloud is telling me. This is going to give me more information. Typically, what I'm looking for is price to, after a decline, after a pullback, a long pullback like this one, I'm waiting for it to show strength. I'm waiting for it to see if it breaks through the Ichimoku cloud. Okay, as long as it stays, then once it gets above the cloud, it's more than likely to continue to move to the upside. And then when things start to get shaky, then you can start thinking about taking your profits, okay, before the decline. And, so that's a good way to look at it. BA, Boeing, all right, here it had a nice move up, approximately, 46.7% in 3.3 months. In that range right there that you see. And since this point now, it's dropped about 10.4. And so you can see very clearly that we've got a double top pattern here. We broke through this little low right here. And so it's looking pretty weak. It's also in a downward channel right now. So Boeing, not something I would jump into at this particular time. I would hold off. Alibaba. Now, on the daily chart, it did start to show some strength today, because you can see that here, where price was dropping, we had ourselves a symmetrical triangle, and it broke above it. The only concern with this one is that the Tenkan-sen, the green line, crossed under the red line. So the faster moving average crossed under. And price is still under the Kijun-sen right there. So, and the red line is above the green line on the directional movement index. So there's a lot of things that are not quite fitting yet or ready. So I would hold off personally on BABA. CG, Carlyle Group, is also in a downward channel. Okay, you can see that very clearly. And as long as it stays under the cloud, it's something I wouldn't touch. COLB is inside the cloud. I also don't like to add positions when price is inside the cloud because that's showing turbulence. There's no clear, there's no clear winner. There's no clear direction, basically, is what I'm saying. There's the buyers and the sellers are fighting it out like a battle inside the cloud there, okay? And until we clear the cloud, it's hard to know exactly where this thing is going to go. And right now, it's just something I'd stay out of that. FITB is the ticker symbol for Fifth Third Bancorp. That's also in a downward channel. Stay out of that one. ILMN, inside the cloud, no on that one. JP Morgan, I had a position here back on August 12th. It made sense to get in there. Price got above the Tengen-sen. I held on. It moved up. Got into the Tengen-sen right there. Took my 7.2% profit. Since that point, right about there, it's dropped about 3.18%. Now it's finding some support right here at the cloud. Notice how the cloud is a great visual because there's a lot of people watching it. There's a lot of people using it. And it's based on math. And so you can see every time price comes close to it, like it did here, a lot of times it will bounce. Okay, so this is a good chance here. It bounced right there, price moved up, touched the cloud there, touched the cloud again, pierced it briefly, and then bounced. So I think that there's a good chance JP Morgan will go up tomorrow, but I can't, I wouldn't be getting into this. There's too many elements here with Ichimoku that are off. Like the Tengen-sen, the green line is under the red line. Chikou span here is under the price. Stay out of that one. And look at the red line. It's still above the green line here. KRE is under the cloud. No. On regional banking. Okay. Even though there was some strength today. PNC is also in a decline. Okay. And you might say, well, yeah, but it's up 1.54%. It looks like this might be the bottom here. Yeah, but it's still under the 200-day. It's still under the Tengen-sen. You could have made that same argument right here, right? We had a bullish engulfing pattern, but price was still under the Tengen-sen and Kijun-sen. And then what happened? It just dropped. So we could see it come back up, retest that 200, and then drop some more, which is most likely, in my opinion, humble opinion. TripAdvisor. Now, this is a little bit different in that it moved up 8.3% today. And what's different about this? Well, you can see that it was consolidating in this little box, right? Price stayed in there for quite a while. And today was a nice big bullish bar. And if you look at the volume down below, that also was higher, about 2 times the volume from the prior day on Friday. And if you look at the directional movement index, that also crossed above the red line, but the momentum is still moving sideways here. It's not there yet, but it's starting to show like, hey, this has some potential, right? The cloud also is bearish. You get the Senko span A under the Senko span B, so no on that one. TSLX, that's also in a downward channel, right? No on that one. USB, US Bancorp. Okay, this one, it's just kind of stuck in this little consolidation and it's inside the cloud, so no. And then Zion is under the cloud, showing a little bit of strength here with this. We had the bullish harami that happened right there on Friday, right? That bullish candle. I've said many times that, this typically does, especially if price gets above the high of that little candle there, like it did in this case, it can lead to a move up. But the problem is, has it reached its target, which is the 200-day? Possibly. And the other thing also to take into account is how's volume reacting? See how the volume here is declining as price is moving up? That's not giving me confidence. That's not telling me that there are more buyers coming in here. It's telling me that there are less buyers coming in as price moves up. Okay, less participation. And the negative DI is still above the positive DI. Okay, By the way, guys, if you want to access my member-only videos, I did do another one this weekend, right? So let me just show you real quick, as I do in every video. This is what it looks like right here. The Blue Cloud Trading end of week stock screener result. It says that, but it's basically the exclusive member-only video where I basically share all of the trades that I placed last week, right, throughout the week. And then I also provide 20 new stock ideas, right? So every weekend I do that, and I provided that for our Blue Cloud Trader and Blue Cloud Legend level members. I do that every weekend. So you can actually view all of these. How can you view these? Really easy. You want to click on join. So right next to the subscribe button, if you haven't subscribed, please subscribe. I'm trying to reach 24,000 subscribers. That would be great if we could hit that before the end of the month. So hit the subscribe button, hit the notification bell. That's free to do. And then you'll find me in your subscriptions section. But then also, if you want to get access to this video and future member videos, right, that I do each weekend, click join right there. This box will pop up, Blue Cloud supporter. Now under this tab, you'd be supporting the channel, and I really appreciate all of you. You can also request a stock to be analyzed on an upcoming show. Blue Cloud Trader, this is where you'll actually get access to the exclusive member-only videos. Okay, you can also request stocks there to be analyzed. And then the third level is Blue Cloud Legend level membership. Okay, and under this level, same thing, you get access to those member-only videos. You can request up to 3 stocks or ETFs be analyzed. And then there's some day trading videos that I've recorded that you can review as well. Now, this is the most key thing about this membership level is the fact that you'll get daily trade updates. So whenever I add a new position or close a position, you know, each day, I basically share that with the members. Okay, the Blue Cloud Legend level members will get that access. And then on the weekend, Blue Cloud Trader level members get to see all the trades that I placed. Does that make sense? All right, so let's get back, folks. Let's get back to what we were talking about here. We were talking about, oh yeah, we're going to go into Tesla. Did we do, yeah, right? We were talking about Zion. So let's look at Tesla right now. Because Tesla, last week, you may have remembered, I gave it a blue flag. Why? Because price had crossed above the Tengen Kijun. It happened on the daily chart. Okay. And then it also on the weekly chart was looking very bullish. And here we are. Now it's moved up. Now here's an interesting thing that happened, which, you know, the Tengen did cross back under the Kijun. Now you're still in bullish territory. It's up 1.85%, and it's more likely to continue moving up at least up to this yellow line. What is that yellow line? It's based on a trend line that I drew from that high, touching that high, and it's extended out. And how far are we from that level? We're about 4.5% away, maybe 5%, somewhere around there. Okay, 4.8. So that's my expectation is it's probably going to, at a minimum, come up to that point and potentially break right through there too. But that's where it may find some resistance. So Tesla, I think, is still good to go. Apple, I don't have a position in it. I do have a position in a lot of the other Mag 7 stocks, but not Tesla. I also don't have a position in Apple. I'm a bit more concerned about the whole China Apple situation. You know, they're really reliant on China, and if China at some point has enough of the tariff situation, right, I think they're just going to shut things down completely at some point. I really do. I think that they're just going to look for other countries to buy, to basically sell to, and they're basically going to cut us off potentially. I'm just saying, that's like a worst case scenario. And if that happens, Apple is completely screwed as a company, because over 30, I think it's like over 30 to 35%, all their the majority of the manufacturing is over there right now. They haven't set up anything here or any other country where they can, you know, pick up the sales. So they are completely reliant on China, and so that's a problem. So that scares me a little bit. And there are so many other companies to invest in. So yeah, although it is moving up and technically very sound, and you know, If you feel that you want to be buying the stock, that's completely up to you. On the weekly chart, it's looking very bullish. It broke through the $260 level on the daily chart also. So it's looking very bullish. It happened on high volume. Positive DI is above negative DI. All right. Experiencing all-time highs. The last time that we reached these levels here, we're back on that little candle, which was on December 24th of 2024. So, yeah, that's where we're at with Apple. Here's Meta. Meta is still under the cloud. It's just consolidating right now. There's nothing happening here. That's it. Okay. Let's see. So now we're going to look at the sectors, guys. I'm going to look at I already reviewed all the sectors here. These are the ETFs for some of the sectors. So for those of you who want to be a little bit more, have more diversification instead of buying individual stocks, one of the ways you can do that is by buying an ETF, right? So here's the GDXJ, for example, the Junior Gold Miners ETF, which is comprised of many junior gold mining stocks, right? You can find it by clicking on the component list up here. If you have this software that I use, TC2000. By the way, I haven't talked about TC2000 for a little while. If you guys like this platform that I'm using and you want to be able to do what I'm doing here, it's really easy. Once you get, well, there's a little bit of a learning curve, but you can certainly copy this whole layout that I have. Let me show you guys how you can get that also real quick. Come to the Blue Cloud Trading page here. Click on 9 more links right there. Scroll down. You'll also get a $25 coupon for the software if you use this affiliate link right here. So you click on this. Okay, you enter your email in here. And then if you have Windows, you can download it for Windows. If you don't, if you have a Mac, you might want to get Parallels. You need Parallels, okay, to run the downloadable software. Otherwise, you can use the web-based version of this, which is not as good, unfortunately. So, yeah, as you can see here, as long as you haven't used this software in the last 12 months, right, so to be eligible for the coupon, you must not have used it in the last 12 months. Then you get that $25 coupon courtesy of Blue Cloud Trading. Here's the pricing information over here. Real quick. Monthly. These are the prices. I do recommend premium versus basic or premium plus if you're starting off for the first time. Why premium? Because under the premium plan, you will also be able to get all these other features. See these features here? Like the chart drawing tools, drag between any 2 points on your chart and preview, easy scan wizard. There's all these really cool things that you can do. So I do recommend this one. And if you do pay, like, if you pay for it up front for like a year, it drops the price to $41.65. If you pay up front for 2 years, it drops the price on the premium to $37.49 a month. So you get a little discount there. And you can see the discounts you get for the other plans too. Okay. All right. Let's get back. Here's gold. Guys, check it out. Now, this was a little concerning last week, right? We had that bearish engulfing pattern. And as I've said before, we never know exactly what's going to happen. When we have a bullish candle like this and then price moved up and then closed under the prior day's low, that creates what's called a bearish engulfing reversal type pattern. They don't always, fall apart. Like it didn't happen here or here. All right. It doesn't always. And so, as I mentioned before, you want to watch to see what's going to happen after that pattern is formed. Does price get above the pattern or does it get underneath? If it gets above the pattern, it actually cancels the pattern. It's no longer really valid. Okay, so it's a false pattern, basically, or a false breakout about to the downside. So I like what I'm seeing here, up 3.64%. There's going to be a continuation now in gold. All right, here's the weekly chart also. It does seem very extended, right? It's gotten pretty far ahead, but when there is a little bit of concern in the markets and the economy and everything else, and the U.S. dollar and all the other stuff that's going on, you got wars happening, Ukraine, Russia still happening, all that stuff. When you put it all together, gold in that scenario thrives, right? So it's been just taking off, especially since it broke through this consolidation little area here, right there, that 317.60 level. Okay, so gold, I like gold. Silver looks good. This one looks also a little toppy up here. That's the weekly chart, and here's the daily. All right. So it's still holding up above the moving averages. Chico span is above price. Everything looks hunky-dory. SMH also looking good. That's the semiconductor ETF. This one is stalling, though, at these highs. You can see that, right? So I'd like to see it get above that area for confirmation, ideally. All right, and then we've got XBI. All of these have blue flags, by the way, because they look good on both the daily and weekly charts. XBI is still looking good. Biotech up 2.2%. Notice how prices held beautifully above that Tenkan-sen, the 9 period. And unlike most moving averages, these moving averages can actually flatten out, like you see here. Why? Because it's taking the midpoint of the candle of each candle, not the closing price. Like a typical 200-day moving average that you see right here, it's taking the closing price every day. So when it flattens out like that, that becomes a stronger level of support underneath it. Industrials also got a blue flag today. It didn't have it on Friday, but it got it back. Okay, so it's above. It's starting to move up. Volume is not as good as it was on Friday, but it's looking good overall. XLK also looking good. Remember, this is the technology ETF. All right, so that also looks good. By the way, just because some of these other, I'm going to give you an example, right? XLV, just real quick before we do anything else. I just want to show you something. XLV on the daily chart here looks good on the daily chart, right? You can see prices popped. It's up 1.06%. It looks really good. Why did it not get a blue flag? Well, this particular ETF on the weekly chart is still kind of, we've got a bearish cloud, future cloud. We're just talking about XLV, which is it's a microcosm of the healthcare stocks because there's only about 62 stocks in here, okay? So when I talk about the sector itself, this is XLV. Never consider XLV to be basically going to give you the full picture. That full picture about the sector, you can get that in the members' videos that I do in the weekend. Why? Because I do something else. Instead of looking at XLV, I'm looking at, I'll show you, this, which is TC2000's proprietary SX60. This is what it is basically a symbol that represents, are you ready? Let me show you. When I click on the component list, 1,149, okay, healthcare stocks. All right, a much more vast number of stocks, so you're getting a better picture of what really is happening. Look at this weekly chart, and this is something I share with, that I share with members. Very strong. Okay, you can see that in this case on the weekly chart, the cloud itself is actually very bullish. Price is moving up. Here's the daily chart as well, very bullish. So consider becoming a member because you will also get an in-depth analysis of the sectors, industries within the sectors. That's also important. All right. I do something called the drill down. Show you guys that too. This is what it looks like, by the way. Here, I'm giving you guys a little glimpse into this other world. So here's the healthcare sector. These are the industries. I've highlighted the four strongest from the weekend that I was analyzing, like biotech, medical care, diagnostics and research, medical distribution. Okay, these other ones. Okay, this one finally popped up, so that one basically looks pretty good on the daily, and then the weekly now. I haven't updated that yet. Healthcare plans is starting to look good. Okay, my point is, on Friday though, these did not pass the test and they didn't get a flag. And I do that with all the sectors. So that's another reason why you should consider becoming a member. Okay, let's get back. Let's get back, folks. Let's get back. Whoops. All right. Here we are. So we were talking about these sectors. So we went into all of these, including gold. Now we're going to look at the weakest of the ETFs. Not, I mean, there's something off. It doesn't mean that they're terrible, but there's something off about them. Oil K, the crude oil strategy. This is the ProShares K1 free. You don't have to fill out a K1 form for your taxes if you buy the Oil K. All right. Unlike USO, for example. So that makes your life a little easier. But right now, I wouldn't even be buying this. As you can see, it's under the cloud. Stay out of that one. Copper, up 1.96%, but still under the Tenkinson and Kijinson, the COPX ETF. XLC, Communication Services, is currently, you got the negative crossover, so no on that one. Bitcoin had a nice little jump today. IBIT ETF, up 4.07%. Look at that nice pop-up. It came close to the 200-day rising moving average. And I said this last Friday, hey, these positive spinning top type candles, they're reversal candle. And if they're close to a level of support, expect it to most likely pop. It did, up 4.07%. Now it did stall at this level, 63.70. We'll see if it can get through the cloud now. We shall see. Real estate, up 1.05%. The cloud itself, the daily cloud is still bearish, okay, but it's starting to look really bullish here. Real estate on the daily, and on the weekly, looks pretty good actually, right? The only problem with real estate is it's been kind of like in this range for so long. I would wait it out a little bit longer. Let's make sure let's confirm that it gets above these highs, because it could very likely just drop right back down. I don't think it's time yet, right? XLY, okay, this one that's the weekly chart. Let me look at the daily. Tenkinson is under Kijinson, and the Chico span is under price. So no. Utilities, that's the XLU. That one's under Tenkinson. Okay, I wouldn't buy this ETF right now. XLV, there's the daily chart. There's the weekly chart. That's not super bullish. But overall, it looks pretty good. I mean, this is all looking pretty good. It looks like it's more than likely to cross soon here on the weekly as well. XLP, stuck inside the cloud on the weekly. On the daily, it's under. That's the Consumer Staples ETF. But it's been rising a little bit. Financials inside the cloud, no. Energy under the cloud. The XLE ETF is under the 200. XHB is under the cloud. Home builders is under, no. Materials, XLB here, doesn't look that great here on the daily and weekly. Okay, but remember, this XLB is a small representation, just 28 stocks in here, right? It might be a different picture with the other sector analysis that I do. So, and then we're going to look at the members real quick. The member requests, UAMY. Now, this is U.S. Antimony Corporation, basic materials sector, industrials, metals, and minerals. On the daily chart, it popped 20.02%. This is a very volatile stock, so be extremely careful. Just from this point here, where it got above the Tenkinson, for example, if I was to measure that to that high right there, that's we're talking about 161%. All right, remember, whatever moves up that much can also drop very quickly in a matter of just days that much. So like from that high to that low, it dropped 43% in about 3 days. And now it's up 20%. So just, I would put a very small amount of money if you're planning on playing this type of risky type of stock, okay? So yeah, UAMY, that's the daily chart. There's the weekly chart. Looks pretty bullish overall. Technically looks good. HSY, the Hershey Company. Chocolates. All right. On the weekly chart, it is currently under the Tenkinson, but it did close last Friday above it. So this could certainly turn around. Overall, it looks pretty good, except for the fact that it's also still under this 200-day moving average. Okay, so that's about 8.5% away from where we currently are. So Hershey on the weekly starting to show some strength with the positive crossover of the Senko Span A above the Senko Span B. Chico Span is above price. On the daily chart, it's pulled back a little bit, but it's more than likely to bounce here soon. But wait for it. I wouldn't just, guess for sure, say for sure that that's going to happen. You have to wait for price to get back above. LAC, finding some support at the Kijinson, 26 period. It's pulled back approximately from that high there, 33%. Another very volatile stock. In just 4 trading days, dropping 33%, and it's up 2.8%. These are big drops, so be very careful with this one here. That's the daily chart, and here's the weekly, holding up. But there's that declining 200-day moving average. And this is, this is a $6.98 stock, so that's why they move so much. Here's LHX, L3 Harris Technologies on the weekly chart. It recovered. So far, it got back on Friday. It closed underneath here. We had a gap up, and it got back above here on the weekly, so that's bullish. But it has not closed above it. Therefore, we don't know for sure where this is going to be. Right? This is a dynamic candle still, and then on the daily chart, we're still under the Tengen-sen and Kijun-sen. So I would hold off on this one too. You can see that little decline right there, right? And but it does look like it's bouncing here off this little reversal candle. So we shall see. That's gonna do it, guys. That's gonna do it finally. After that's a long video I just did, 44 minutes. Whew. Anyway, I do enjoy making these videos for you. Share some love by hitting the like, subscribe button, and I will catch you all in the next one.